You can't buy a bank because you can't sell it. You cannot start a bank. It is even vague in how you can operate a bank. I think the big banks have conspired from a regulatory perspective to not allow anyone who wasn't a bank to get into banking.
Hello, fellow data nerds. My guest today is Eric Glyman. Eric is the co-founder and CEO of Ramp, a financial operations platform. Ramp is one of the fastest growing startups in history, reaching 100 million ARR in just 3 years. Now, Ramp is about 5 years old, and they serve more than 25,000 customers, including Flex Capital, where I work, and valued at over $7 billion. Prior to Ramp, Eric co-founded Paribus. Is that how you pronounce it?
That's right.
Which was a consumer app acquired by Capital One in 2016. So, Eric, welcome to World of DaaS.
Auren, thanks so much for having me. This is I've been excited about this.
I'm really excited. Now, in some ways, your Ramp's kind of the exception to the rule. There's been kind of very few fintech companies that have successfully disrupted the existing players that are out there. Why aren't there more Ramps?
Well, first, thank you for the kind words and introduction. I hope this is interesting and useful to the people listening in today. I think some of it is around alignment. I think a lot of fintech companies and just financial services companies in general are just notoriously misaligned with their customers, and we can talk about that. And I think that the other is probably maybe based more in just the history of payments and how differently it's behaved from the rest of technology. I'll start with the first, which is simple, and maybe relates more to our history. When Ramp launched in 2020, we had this idea of it should be a card that is designed to help you spend less, and that was a really weird and different idea. We fell into it after selling our last company, as you mentioned, to Capital One in 2016. When I was there, I learned a lot about turning data into saving consumers money. It formed the backbone of Capital One shopping, and that was great. But through a weird quirk, they didn't know where to put us. They put us in the credit card division. We got to see how the business worked, what made it very profitable. It was awesome. But we found there were a lot of people thinking about what was good for the business, which was to get people to spend more money on their cards, Capital One, earn more purchase volume. I had other colleagues thinking about how to get people to think the points are worth a lot, and some of them would devalue it. And as the resident savings people, we would ask customers, do you want points or cash back, something different? And what do you value? And if you really listen to customers, they would say, I just want more in my bank account. I would love to live a better financial life. And so we started thinking about that, and it kind of dawned on us, well, if you really want to solve that problem, there's an awesome way to do it, which is help people not spend $100 on something they don't need in the first place. It's 100 times better than getting 1% back. And got obsessed with this idea of what if there was a card and software that would help you do that.
And also cancel these random recurring payments that you don't really need, and or at least ask you about it, or say, hey, by the way, there's this new deal. You're paying $30 a month for this thing, but there's this new deal on the website for $20 a month for the same thing. Do you want me to change the plan for you?
All of this, right? It's like you booked a hotel and the next week it goes on sale. Or the price goes down.
Yeah. Could
you cancel and rebook it? There's all these different ways. You're on a monthly plan, you could be on annual. But when you think about the history of payments, unless you were a bank, you couldn't move money. And so it's been the same people who have just owned the industry for 50 years. Capital One is an exception, but most of these banks, their founders wore top hats. And quite literally, it's not a joke. And so if you have 20% of a market, 40% of the market, what incentive do you have to actually help people spend less? And so some of, I think, what separated us from both the traditionals and even the new players that have entered the space was we didn't start this with an idea of this. We would sell same product in a different way. The problem we wanted to solve was not how do you give cards in people's hands, but how do you help businesses run leaner? How do you help them spend less? And so I think some of it was a different focus. I think that the other, somebody said to me recently, I think maybe you guys are a productivity company masquerading as a fintech. And I thought that was charming, but it was sort of this interesting thing where if you think about most of the history of technology, there are these great companies that are dramatically better, and they gobble up a lot of market share. And as the world went from no phones to flip phones to iPhones, credit cards never changed, bank accounts never really changed, and kind of the world of money was the world of banks, and then software people could build aftermarket things. And the result was that for most people, to buy one cup of coffee, one subscription to software, you need two different tools to buy it. And so I think that the other thing that we did that was different was we try to excel both at having great payment products, but what we're focused on is workflow automation. How do you help not just have an easier expense report, but just a zero-touch expense report? Not just easier to do books, but books that keep themselves money that find its way to the highest yield. And I think that over time, it's gone from historically, one card has this point program, one card has this cashback. They're kind of variations on a theme to, I'm not trying to sell a different card to someone. We're trying to make companies more profitable. We're trying to automate processes, and it's very different than a lot of what else is in market. I think the differentiation has been useful.
It's hard to just align incentives with the customer. If you think like a traditional bank, let's say it's got a checking account and a savings account, and the savings account is relatively high yield, let's say, and the checking account is zero yield. And they make it they want you to have as much money in the checking account as possible because they make money on it, and as little money as the savings account. So they make it actually quite hard, and you can't really pull money from your savings account. You can't do things, and it doesn't auto balance, and it doesn't do these other types of stuff. You can't wire from your savings account, right? They do all these things just to make it so they can earn that extra vig on that transaction there. And that's obviously all bad for the customer. And the customer has to remember, I got to log in every week and rebalance or redo something. And of course they're going to forget and, all this other stuff. But you could understand the incentive of why the bank does that, because they might make another 100 grand a year off of a customer or 10 grand a year off a customer by just making it hard for them to move money.
100%. And I can understand, I feel like people have gotten away with it for a long time, right?
Yeah. It's very bad behavior, but every bank does it. I mean, even some of the new banks, do it.
Yeah. I identify with what you're saying, because we today, we don't store money, but as part of our risk and underwriting processes, we're linked to, $100 billion plus of assets. And I can tell you, it's what you're saying isn't anecdotal. It is done at very large scale. These banks are extremely profitable. And I think it's fine. They've been able to make it work for a long time in a world in which their only competitors are banks who've had the money for a long time, the market share, and no new entrants. But I think that will change. Maybe us, maybe someone else. We want to compete and we want the best product to win. But, I think that I'll put it this way. I think a lot of businesses over time are come out of what is the central question and what's the central mission of the business. And, at the start of Ramp, we wanted to be pretty intentional of, we're not in the business of slinging cards. We're not in the business of selling bill payment software, whatever it may be. Our mission is to help companies spend less money and spend less time. And if you ask where are businesses spending money that they don't need to, where are companies spending time that they don't need to be, you ask different questions, it will lead you to different answers, and it will lead you down a different product set. And I think in some sense, I think that by starting by trying to align our incentives with customers, actually have a business model that gets better. The more money and time we save you, the more we think and hope and believe customers will want to use Ramp. The more we grow, the more efficient they become, and the more enduring of a business they build. And I think that difference is part of, actually, I don't think it's much more complicated than that, of why Ramp has become, we think the fastest growing fintech in history, but we hope and believe one of the faster growing companies in history. is just trying to bring this simple approach, actually aligning incentives with customers and going from there.
On the UI side, in the B2C fintech, there are a lot of the new fintech players have quite a good UI. You think of Robinhood and Chime, and some of these other guys have quite a good UI. On the B2B side, it's understandable that like the legacy players don't have a great UI. You wouldn't really expect Chase or somebody like that, Bank of America, to have a good UI. But even some of the newer companies, if you go to Bill.com, like the UI is just really lacking. If you go to, why are some of these B2B players still like they're just still having grass? Like, is UI not as important, or is it just because like there's APIs in the background and people don't use the UI as much, or why is the UI just not there for most of these players?
No, you're totally right. And I always found this interesting because our first Ramp is our second company. The first one was a consumer app as well. And so we fell into this and wondered, these people go home and they buy Apple products and they wear Nike shoes and they're using Robinhood and Instagram. Like, why can't the products that people are using for hours a day, why aren't they more special?
If you're enjoying this podcast, please sign up for our newsletter. Go to worldofdas.com. The link is in the description below. Now back to the video.
Why aren't they beautiful? And truly,
I
actually
don't think beautiful. Like, it takes like 15 clicks to do something. It's a little bit buggy. It has all these issues. It's like if you go to the branch of a bank, it's beautiful. It's like gorgeous, and the UI of the branch is great. Like, it's spotless, and the people are great. But if you go online, it's like the equivalent of like showing up in the branch and there's like dirt on the floor and there's rats running around and stuff, right?
It's so I actually think this is a really deceivingly good question in a lot of ways. So first, I believe some of this has to do with incentives in the business, and some of it has to do with like who is designing this. What are the constructs of companies? When were they made? And who's there? So first on incentives, I mean, one of the classic problems in B2B software is the person you're selling to isn't necessarily the user.
Yep.
Who's the buyer is the user. And I think it's been made a lot worse in the office of the CFO in the category of all this, because not only do you have point solutions where classically the software that dictated the rules of what the card would do versus the expense app versus the bill payment were all different, so they didn't connect. Were messy, but I think what made a lot of enterprise software is just that. The person they're selling to wants control, wants to make things harder, and you see kind of this backward sort of thinking. And so, I think if you're trying, often dealing with like the CFO, and you're trying to convince them, hey, my software is cheaper. At times that will work. They'll design kind of cheaper, cruddier software, and you can't expect the outcome. I think that we've, and by the way, even too early on, like we had to say no to a lot of businesses that wanted, some
access control or some other type of thing.
Or just like integrate with this other tool already. I don't want to take some chance. It's kind of a conservative mindset. So it's easier if you're short-term focused. It's easier to do the easier thing. You get kind of cruddier outcomes.
Hey, by the way, it's a good point, because like the software that is most, like the biggest software that's sold to the CFO is the GL, right? And that is the least good software I've ever seen in my entire life. Like, it's so hard to use, and maybe it's intentionally hard. I'm not sure. Like, if you ever try to use Workday, it's just like it's an atrocious experience for anybody.
It's this weird thing of these systems of operations and systems of record, and they're kind of point solutions. Like an ERP is let's say you have a 500 person company. You might have seen it because you're building the company, but my guess is probably like 5 people have seen what your accounting software looked like. Maybe 2 have seen your bank account. Maybe 8 have seen what Bill.com looks like. And so it's like not really designed for use. It's designed for like record keeping and all that. Ramp is very different. In the 500 person company, I mean, at many you'll have 500 people using it. Maybe you'll have like 400. I think some of that is an outcome of focusing on productivity. How do you help people spend less time? We design for that, but some of it actually has to do with like who is the software being designed for. And our view was a lot of the problem was the people making money decisions, the CFO, controllers, had power and needed control, but lacked context. Employees who had the context maybe lacked a whole view, and you need something like Ramp, which could be a mesh effectively, where you don't abdicate control. You can have control of every individual card, but you make that experience easier. Maybe to back up though to the other point, when I think about payments companies in general, I think you and I have kind of lived in a world where like the fast moving, tech companies, the move fast and break things of, Facebooks of the world, the Amazons, the Microsofts, all of it that like pride on really fast development. When I think about the payments world in general, a lot of the great companies, American Express, unbelievable brand, one of the best marketing organizations I think on the planet. Chase, unbelievable distribution. Capital One, great at risk assessments. They have things that they're great at, but they really struggle a lot with maybe this fear of asymmetric downside, asymmetric risk. And as a result, have designed lots of processes internally to make sure that you have everyone sign off for reviews. A whole committee, a legal team reviews it, regulatory teams reviews it, finance teams. And so shipping speeds are a lot slower as well. And so when I think about like bank branches, you don't really carry the same regulatory risk. It's kind of control. It's just how an office looks. It's like the form factor. It's not how it functions. It's not how it feels. And so it doesn't go through as many committees. It's not as complex to design it. You don't need as many people involved, and it can't go wrong in many different kinds of ways. It's contained. And I think that a lot of the orgs moving money and banks struggle with kind of separations, precisions about who has access controls to what to design an effective building process.
I remember a few years ago, we had a little bit of a decentralized buying at our company, and we had 6 different people that had like a yearly LinkedIn subscription for like $1,000 each. And then we found out that you could get like 10 seats for $5,000. So we could save $1,000 and get more seats. Obviously, that was a good thing. But like, I wish we would have known about that beforehand. And I would think you guys could like tell us. I'd imagine you would have the ability to not just see what you're spending, but somehow crawl and understand the different deals or understand what other people are doing. Is that kind of like the vision of what you want to do?
It is. And after, I'm going to send you a link to our vendor portal inside on the dashboard. You'll find price intelligence, which is a pretty interesting feature. And effectively what we do is we aggregate de-identified, anonymized data about top SaaS vendors. And we'll pull that from receipts, invoices, MSAs. And so just as Zillow did for consumers, you can know what your house may be worth. TrueCar did for car buying, we want to do for B2B SaaS. And so the next time you have a renewal, you actually can go into Ramp today and see here's prices by product line, by if you're doing monthly versus annual, and if you're buying 1 seat, 10 seat, 100, 1,000, 10,000 seats, how that distribution kind of looks. But I think that you're right. But part of why, and maybe to back into, we had this vision of we wanted to help businesses spend less money, and the question is, where could you get enough data that would allow people to see that? We felt that if you were both executing the transaction and you collected the receipts, the invoices, not only could you facilitate the transactions, smooth out the workflows, but for companies that you serve, your customers, you could show them where they fit. So price intelligence is something we do and we're investing a lot into. The other is seat intelligence, where you don't necessarily need to know how else are other companies doing, but sometimes as companies get bigger, they just become more complicated. And so maybe,
Yep.
let's say you did that deal and you pay for 10 seats. You can link up your Google account or Okta if you use that. And we can show single sign-on data to say, you're paying for 10 seats, 6 people logged in.
Yeah.
Do you still want to pay for all 10, or next
Yeah.
time you want
Yeah.
to go negotiate for
That's
lower?
great. Yeah, that's a great because getting all that information takes a lot of time for someone to go through, and it might not be worth the time right now to save $1,000. But if you could just give it to them, then that's a huge benefit. Now, one of the things that I really like about the position you're in is you have all this data about spending and what's going on. Like, what are some interesting patterns or trends you're seeing in corporate spending that might surprise us?
Oh, for sure. I mean, I think, first of all, we try to put out reports really regularly. These kind of culminate into 30 to 60 page, depending on the quarterly reports. So you can see for small, medium, and large size businesses, what's happening, how is that changing? And the next one is going to be out in about a month's time, so called early November. I think probably one that we get asked about a lot that's interesting is what's this deal with AI? There's been unbelievable amounts of
Yeah.
investment going
People
in.
spending
Companies
on
are
OpenAI, are they spending on other types of vendors? What's happening there?
Yep. Maybe let's start there on OpenAI. So I think classically, if you looked at the data, there was one name that mattered, and it was OpenAI. One of the things that came out in the most recent quarterly report was Anthropic. In Q1, they were about 4% of that big pie, pretty small. Q2, 17%.
Oh my gosh. And I assume the
Wild.
pie is also growing. So this is pretty impressive.
Absolutely.
Yeah.
It is very impressive. And I think a lot of this came from part of why that industry is so competitive, which is with one line of code, you can switch where the network call goes.
Yeah,
You
that's
can
right.
call this library.
Right. So if you have
Now,
an API and Anthropic is slightly cheaper, slightly better, you might as well just try it for 30% of your things and see how's it going.
yep. And so that is a big one of there is a real reason for why these vendors are so hotly competitive, which is that traffic is switching, things are moving, so it's very
Got
active,
it.
and we'll have
And they go from 4 to 17. They could go back to 4 if someone else is slightly better, right? It's very competitive. It's very easy to switch. There's no real lock-in right now.
100%. And that's a pretty important thing for just AI vendors in general to be thinking about as the space is moving. I think just on AI for a minute, we can move to other kind of categories. It's becoming much stickier. I think if you were to look at the retention data of merchants, if you were to go and look in, call it a year ago, 2 years ago, for businesses that tried out an AI vendor, only 40% of them would still be paying that same vendor a year later. So from July 22 to July 23.
Yeah.
From July
Well, by the way,
23 to
ChatGPT came out in November kind of 22, which is, we're taping this in October 24, so still less than 2 years ago. So you're really talking about pre-ChatGPT, before that kind of cognitive revolution came in everyone's head.
Exactly. And you nailed it. The products are getting better, and the desire to use these things are getting stronger. So if you look at that same, all AI vendors broadly, it jumped from 40% retention to 67% retention, and every single one of these cohort curves is getting a lot stronger. So these products are getting stickier. Things are moving from card to invoices. And so people are signing long-term contracts. So I think really the broader point is they're going from things that people are testing to actually deeply operational. And you can see a lot of interesting things too. I think if you look kind of more broadly, probably the biggest story that we've seen in B2B payments for this year is just been the return to growth. The spend.
Oh, really? So we're now spending again, we're not cutting as much? And not just on
people.
software, but on other types of things, travel, other things?
Yes. I think for a long time, businesses, especially 2022, 2023, dealt immediately with the rising cost of capital
Yeah.
and had to, capital markets were fairly closed and you had to go lean. But now as rates are coming back down and just valuations are increasingly tied to how much profit will this business do in 10 years, 20 years from now, the biggest driver of that is growth. And so you see spend on advertising coming up very significantly. Some of that is cost of ads going up too. It's not just people are growing, but I think for business that's heavy.
Interesting. Now, I feel like your data also be really good at, like you just mentioned, this Anthropic data. Like if we were an investor, it would be really great to have access to this type of data to understand like what is, we might know something before the public might know it. And either we could invest in public companies together and get an edge, or we can invest in private companies like Anthropic together. Like, should you and I just start like a hedge fund or a venture capital fund to go do this? Like, could you trade on your data? I imagine you can make a lot of money by doing that.
It's a good question. And I think you are probably right. What would I say? I do think that the primary thing at the end of the day that Ramp is trying to deliver, saving time, saving money, alignment. I think the core underlying principle out of is trust. Our customers need to trust us to, cards need to always work. For automating accounting, we need to allow them to operate more efficiently. And last, if we're saving money and time, like I do think probably the core thing that we need to do as a business is make sure like we are always doing right. It's in the interest of people. And so I can't say I've thought about it too actively, but I agree with you. I think the data itself is very interesting, and that's part of why we try to, once a quarter regularly
like a new API company or something, and it goes from like 0 in September to something fairly significant that you can see in October and November. It's really going off the charts. Maybe the typical venture capital firm like may not know that. And this might be a very good time to jump in there.
I mean, I love the idea of like using data to help customers. Like I think that is awesome. In the same way of like taking this data and saying like, here's where you are, here's where the other customers are getting charging. Don't get charged more because some salesperson thinks they have you, and they give you like a crazy, again, interesting rate. But I think you're totally right. Maybe there's something to do if businesses can, share and get something. Probably worth some deeper thought.
You can give a percentage of the carry to your all your customers or something. What now? Visa. I love Visa. I love reading about Visa. I love reading about the history of Visa. It's one of my favorite businesses to study. Like, what have you learned from them?
They are I think that their corporate structure like resembles like the Boy Scouts of America, or like the Constitution, more than it does other corporates. I mean, what a fascinating, weird business. And so before starting, I just spent weeks reading everything I could about like the history of Bank of America, which led to Bank Americard. Which
did you read the book A Piece of the Action?
Piece of the Action.
Yeah, that's one of my favorite books. It's so good. Yeah.
That one's amazing. I mean, I think some of the others are a little crazy, like the Chaotic Organization from D. Hawk was a little wild. Visa, Power of an Idea. It's a really unusual history, and I actually think for anyone who's deeply studying business, you should pay attention to it. And you know this incredibly well, because it so doesn't resemble other corporate structures. It is trying to be designed such that, even if certain players were acting totally in their incentives and trying to break it apart, it kind of gets self-reinforcing about it. What I would say about them that they get right, I think sometimes people ask like, Ramp, so when are you going to go and disintermediate this network or ever? I tell people like, actually Visa is an incredible partner. They're kind of amazing, and they bring. I think part of why they've gotten as large as they have is that for basically almost all players, I think that they actually make everyone in the ecosystem's business a lot more valuable. And I think there was weird principles that go into it. Would be my honest thought about them. But how do you think about it, Auren?
I mean, they are so profitable that
Yes.
they actually have like a whole unit internally trying to figure out to just spend money, because if they were as profitable as they would just normally be for if you were running the business efficiently, like the government would jump in and like shut them down or something. So they have like this whole side hustle of just trying to figure out how to waste money, how to throw money at things, how to go do things with the money, so that even there their profit margins are still extraordinary.
It is extremely profitable. I wonder if they would describe it the same way, but look, what would I say? I mean, it's definitely self-evident. It's one of the most profitable business models on the planet. I do think what I think is probably interesting to me about them is probably the incentive thing, which is in some sense like people could choose not to accept Visa, or banks could choose not to issue with Visa cards, and yet everyone kind of does. Um, and I think that people talk like it's thrown around a lot of, oh, if you should study incentives. Why do people do what they do? How do you motivate people? And maybe they got lucky, but I don't think it was just that. I think that company has studied in incentives for all parties involved much more closely than I think many people have. And I think there's a lot to learn from them. But I know there's a lot of attention on them now, especially the last few weeks.
Yeah, for sure. Now, you recently tweeted, you said no one ever got fired for buying IBM, but maybe they should.
Yeah.
And how do we kind of create cultures to be more bold to do those things?
I mean, oh my gosh. I mean, so first, like, I mean, it's very obvious when you're a startup, like you're a few people, you get a sheet of paper issued by Delaware, and you're a company, and you have this really arrogant proposition of you're going to go and start a company that's worth millions, billions of dollars. Very few companies ever have, and yours sitting from a couch, you're going to go and do that. You can't do it just through taking kind of the average out, buying things at an average price and getting an average outcome. You need to find mispricings in the market. And that could be you find people who are way more talented and capable than maybe people understand. Or it could be you work with another technology partner, you pick a vendor that is on a really steep trajectory. Maybe their prices are here today, but they're getting better really, really fast. And they're going to build things specifically useful for you that will give you the power of a bunch of people building for you. And in our case, early on, we realized that working with certain partners, Marqeta and Stripe were early ones, but it varied on different aspects. Where you could pay a little bit for a network call and effectively have hundreds of engineers building just exactly what you need
Yep.
for your business. And so, in some sense, it's very obvious, and people lose sight of it as businesses get bigger, because the question is not how do you create really outsized value? It's how do you protect some of the value that you have. And I think that I think it needs to come. Some of maybe it's incentive structures, or people paid for just things they do this year versus outcomes in 10 years from now. I think there's companies thinking about 10-year vest schedules, out of the money options, the way, some executive are compensated, maybe, regular employees should have too. But I think that the other is like, you have to, like, I don't know that the essay was particularly clear about the meaning of like the founder mode essay, but I think that you actually need to, from time to time, like be really clear and direct about these things. If you have different and controversial views, to talk about it and show examples, and maybe to say, look, like we went too standard, we're going too slow, and like we are going to make a change, or this team, it didn't work, and let a team go. And I think it's never fun, but I think that if you want to have different than average outcomes, you can't behave in an average way. And that's kind of roughly how I think about it, but I actually think it's just true.
Now, if you think of like
Yeah,
buying vendors, like
yeah,
it's certainly a lot easier to fire a vendor than it is to fire an employee. And nowadays, most companies have more vendors than they do employees. So it's and that ratio is going up. So
You know what? I used to think that, and then I was at a meeting last week with a company, and they were telling me that they bought this software in 2012, and they are still paying to implement it, millions of dollars every year.
what?
They would like it's an
Oh my
ERP. They
gosh.
can't fire them. There's another procurement
Jeez.
tool. I don't know about that actually.
Okay. I guess I'm wrong. Yeah. Uh,
I'm
now
teasing.
you
No,
mentioned, I mean, you mentioned two vendors that in the kind of B2B
yeah,
payments world that I really admire, Marqeta and
yeah,
Stripe. We were investors in
yeah.
Marqeta. I wish we were investors in Stripe. What have you learned from those two companies? Because both of those companies are really amazing.
Oh my gosh. I mean, both have been phenomenal partners. I mean, I think. What would I say on each? So first, I think Stripe, in many ways, they were like the inspiration in a lot of our early hiring practices. I remember pretty distinctly is 2017, 18. And if you were to talk to any up and coming, if you're an up and coming engineer and you just want to say, hey, I want to work at the best company, an engineering driven company in payments, where should I go? Everyone said you got to go to Stripe.
100%. Yeah.
100, like no question, right?
Yeah.
And I think they figured out. I mean, some would maybe call it like mystique or whatever, but it was this sense of talent density of if you have the first 10 people be really excellent, truly world class, maybe go more generous on
I
equity, but
mean,
like really
just
special.
you have to though they have a bit of an unfair advantage because their two founders are just like off the charts amazing. Like most of us are mere mortals compared to the Carlson brothers. So it's a little it's kind of unfair that they have these two amazing founders.
It's true. They are great, but I maybe to push a bit. Um, Greg Brockman's not a Collison, but that guy is amazing.
That's
Like,
true.
and he
Good
was their
point.
CTO for a long time.
Yeah,
Like,
that's a good
like
point. A
Lockheed
really good point.
Rooms.
Yeah.
They're like if you were like on LinkedIn and Stripe was 30 people, it's like each person was like almost more interesting than the next.
Hmm.
And it's like it's like the funny thing about companies that are doing $1 billion a year in revenue. They were doing 100 million first, then 10 million before that, and 1 million before that. Like they kind of reverse engineered it of like they actually just really were obsessive about finding great people. So that if you think about it from the candidate's perspective, every time you pull up that LinkedIn page, you see who else is there. It's just all really
Yeah, you want to
impressive.
work with
And they
those people. Yeah. Even
exactly. So they
today,
try.
like when I look at like the average Stripe resume, even though they have probably over 1,000 people today, it's really impressive. Like the people who work there are very talented.
And that's it. I think that they really tried to, internalize like A players hire A players, but there's a reflexive property to it, which is like if you get talent density right at the beginning, and you actually kind of just obsess over it, a lot of the rest takes care of itself, and it makes it easier to keep quality high as you're scaling. And so I think there's a lot of lessons in just how to find great talent and build a brand around that that we learned from them.
One of my hacks in like looking at companies, like especially like B2B companies, is looking at their docs and seeing like the UI of the docs, and the UI of the Stripe API docs are about as good as you could ever imagine. Like they've really
Totally.
thought it that through in a way where they clearly care about the customer.
Oh, totally. And I think, I mean, this is maybe to the point about B2B products earlier. You can make certain things beautiful, and it just says a lot about the rest of the company. Like if their docs are pristine,
Yeah, and just like it's easy
what,
to find the thing. It's easy to
yeah,
try it out. You can write a test right there, all those things.
all of it. And I actually think that's like there's a lot of alpha for anyone building in B2B of just like little tiny experiences, getting them just right. It just speaks volumes. And we've tried to build a lot of that even to ramp. But maybe to go to Marqeta, because I actually think there's a lot of really fascinating lessons there too. I mean, there were a lot of interesting things that they did. I mean, they started as a gift card company, almost marketplace API for it, and then it turned out. I mean, they basically invented this concept. Some people forget it, this idea of just-in-time funding, but it allowed you to synthetically like fill up a card during the 3 seconds between someone swipes your card, so you have to approve or deny it, and that effectively allowed us to later build everything that we did, like expense policies that could be infused into your card. But they were actually one of the very key players that is core infrastructure that set the stage for like the revolution in fintech that happened. I actually think sometimes what people underestimate about like Stripe had like the glow and the luster, but Marqeta, I can tell you, in the very early days, and still to this day continues to be an outstanding customer because Ramp is an important partner of theirs. I think whether Ramp does well or not, I think Stripe cares, but like they're fine. I think they will be unbelievably great and outstanding no matter what. I think Marqeta will find a way through, but if we do well together, like we're going to build each other's businesses at the same time. And I think sometimes this is related to the IBM point. I think people sometimes undervalue businesses that are maybe in second or third place or still on their way and smaller companies. And the difference is that if they are heavily incentivized, or if we do great work and build something great together and they make Ramp successful, they become very successful. And it's sort of, I remember early in my career, I heard this, I don't know if it's true or not, the story about the Hollywood agent where he's up against like 6 other people trying to convince like this star in Hollywood why, she shouldn't go with the big agency or whatever. And he said, look, I don't have the, I'm not part of this big firm. I don't have 10 other stars. I'm not going to get all the looks from the directors, but I promise you, if you pick me, I'm going to go to sleep thinking about you. I'm going to wake up obsessing over how do I make you the biggest star ever. And if you do, like, I'm going to be like loyal because you made my career and go do that. And I think it's actually related to, if you're taking a bet on the right vendors who really are invested in your success can be transformative to both. And so not only do I think Marqeta has been deeply innovative, but I think that they, in my interactions with them, and I think, and I'm not just trying to be like nice. I think the call center try to preserve this at Stripe, but I think that they especially embody the like they want to see you succeed and work with you. And so it's something I've seen them do very well, and I think is probably a pitch to any company deciding between like the big known brand or the unknown. If the unknown is maybe has like the right things, they're on the right slope, and incentives are in line, like think about them more than you would.
Possibly the best ad campaign of all time was the Avis Were Number 2 ad campaign.
We work harder.
Yeah, exactly. Yeah. Like, I mean, it's so compelling. And it just kind of, it makes sense. Like it intuitively makes sense that, someone who's going to want your business more, they're just going to go that extra mile for you. Rather than going for like the big brand or somebody who might not care about you. Like the big Hollywood agency, as you mentioned. Now, one of the things, I mean, you guys have scaled a lot in terms of like having to hire lots of people. How do you keep that quality high? Like, what are some of the things that you do that maybe other companies haven't figured out?
Oh gosh. There are some things that make hiring at Ramp like pretty weird in certain sense. Probably the biggest, I'm sure there are people who are much better at hiring than me. I think I've had mixed success at hiring, like the person who's been there, done that, executive.
Hard to hire execs. Yeah.
It's really hard. And I think early on, we just said, we're not the best in the world at it. Maybe there's less alpha there. It's all priced in already at that point. And we're not so good at it. So instead, we're going to try to hire the top of the class at MIT as a freshman for their summer internship when no one else is competing to get them an internship. Or we're going to go and try to convince someone to drop out, or we're going to go look
like
at
the Moneyball-ish approach or something.
Exactly. And you'll see this too. I mean, it's both in how we hire and how we've advertised, like Neil Shipley, who was the low amateur of the year at the US Open golf tournament and, um, uh, nationals and all that, sponsored by Ramp. And it turned out like did great. So we try to think about kind of the Moneyball approach for hiring, for how we go to market, but just try to find more efficient outcomes. And so I would say obsess over that in a way where very few companies do. I think Google did. I think Facebook did. I think Stripe did. But compete in a spot where you can uniquely. I think next, with engineering, we actually don't really hire managers. Sometimes it's harder, right, in getting the right person in mid-senior kind of levels. But we try to find great people and stretch and promote from within. I think that goes a lot. And then last, and this is one of the better lessons I think I picked up at Capital One. I remember on day one I got there and I was just like shocked as like a kind of millennial, where I meet people and say, "Hi, I'm Sarah. I've been with Capital One for 12 years. Hi, I'm Tom. I've been with Capital One for 22 years."
Yeah.
And like my brain was broken because I didn't. This was like mid 2010s. Silicon Valley was like my experience where people, staying at a company for a long time was a year and a half, and I was trying to like, how did they do this? Like, what was going on? And it turned out that they didn't just talk about what does the company need, how we're going to get that done. That was their, some teams a lot, others less. But they actually asked people of like, what do you want out of life? What are kind of your goals, and are we moving towards it? They didn't just have, performance. They had development conversations with people. And
how did they get that?
Kind of,
I live a few miles from Capital One headquarters, and I meet a lot of people that work at Capital One. And as you mentioned, so many people have been there like over 20 years, and they like it, and they talk great about their employer, and like. But I never could. Having never worked there, I never could figure out what they do. Like, how did they do that? Like, what's the secret?
I think it relates to this truth at some level of, to some extent, everyone is kind of the hero of their own story.
Mm-hmm.
Everyone is living their own life, and if I think at Capital One, they did a very good job in most teams of making you feel, actually encouraging managers to ask, like, what do you want? Where do you want to go in 5 to 10?
So you're really
15
just
years?
caring. You're saying like they care, and they
actually
express it. Yeah.
And they follow through. And in some teams, it'd be like once a month, or it'd be once a quarter, where it's like, we're not going to talk about work. We're going to talk about like, here's what you said at the start of the year and where you want to go over the coming years. Are we getting closer to that? And it sounds
it's amazing.
So simple, but it's really it's true. And I think if you kind of do both, you find great people and you coach and you figure out what's great for the company, good for them, and you bring that in. I think it can help in a lot of areas that a lot of companies struggle with.
Now, we talked about like managing vendors, hiring vendors, bringing in vendors. There are thousands of books and gazillion business school courses about managing people and hiring people. But there's no good ones that I know of, at least, about how to select a vendor, how to manage a vendor, how to grow those vendors, how to build those partnerships, how to manage all that type of thing. What do you do to infuse that or to test for that?
I actually think it's like weirdly important now in a way that it's not just like a fun thing to talk about on a podcast. Like we're kind of in a world where computers can kind of think, actually, and like software can
totally
increase, it can, right? And it can do kind of knowledge work. And so I'm not saying we're at a spot today where you can hire 100 knowledge workers, but it's not a totally crazy thought to think that might be plausible in the coming, depending on who you ask, months or years. and so training this, I think, is particularly important. And so first, I think being clear on like what is the problem you want to solve now, and what is the shape of that problem going to look like over time is important. I think a lot of time people say like the problem's going to look like this and don't play it forward. I think with employees, you kind of remember that you can teach them things. I think with systems, like the data that goes into it, how it connects, and also like the shipping speed of a company is like pretty real. Often when we're looking for vendors, one of the things that we look at is like, is the tides riding? Are they investing a lot, or do they just have a bunch of layoffs?
Yeah,
Are they
so
not
basically velocity of new features and things like that.
Right, velocity of new features. How, like, what is the right kind of central organizing point of data? Is this a system of record or action? How do things connect? So we'll look at like integration points for like the task at hand. And then I think if you kind of think about some of the killer attributes of like large language models, where things were going, we'll just talk AI for a second, we talk about general vendors. Often the more data it has, the more useful it can be, the more context about what you want it to do, it's better at prediction. And so in some sense, sort of just thinking about how much is going to the training of that, the velocity, the improvement of that model, and how incorporated is it to the right data models. Like one of the advantages we're trying to bring to all of our customers is, your car data, bill payment data, procurement data, travel data, bank data, it won't exist in different places. It's kind of in one. And so if you want to ask globally how to cut costs, how to, automate more times, it's a lot easier because it's plugged into more sources of data. We have more revealed preferences about how your company operates and how to make it operate more efficiently. And so you want to think about that for the jobs to be done for the software suites that you're using. Would be my thought about it. And then other things too, there's this question of build versus like buy versus kind of like partner. What's the nature of the relationship? I think in some sense, if you model out the unit economics, how your business works, there are some deals where you can pay a small amount, and to build it and maintain it, your cost would be this, versus a regular network call is going to kind of scale incrementally with the number of units. And so you want to think about like, what are the scaling laws of the product that you're buying? And ideally, as your business scales, the cost goes down, the value goes up, it's connected to the right data, that kind of it. It gets very nuanced, but we just try to break down to the first principles, like these types of questions to get into it.
Now, a few personal questions.
Yeah.
You speak fluent Mandarin. You lived in China for a couple of years. How has that shaped your worldview?
Yeah, super fun. I mean, I lived there mostly 2009 through call it 13, but kind of went back every year through the pandemic, and I just never seen a place get developed so quickly. Like I remember one time it was 3 months between trips. Where I left my stuff at a friend's apartment and came back to the US. And then I went there 3 months later and I couldn't find the apartment. I was like in a taxi cab circling around. I'm like, I know this place was here. And it turned out they had built an entire section of like high rises in the 3 months and rerouted. Like, it's like, that's the level of development. And I think the way it affected me was, I compare that to like friends, who grew up in cities like Boston, where like,
the big dig took 20 years or something.
I think longer. I don't know.
Yeah,
and
probably. Right. You're probably right. Yeah.
I don't know. It's terrifying, right? And like, there's the world and you live in it. Versus in China, it is obvious the world is getting built and you can play a part in building it. And I think it weirdly pushed on like my startup, like just inclination of like, let's try to build stuff. Like I didn't feel like it was so impossible. I think the other thing too, I remember, so I direct enrolled in Peking University in a bunch of classes. I took like accounting, I took some economics, I took different classes with students ultimately going there for college, which was amazing. And there was one story that kind of changed my view about like studying businesses. where we effectively were assigned, a research report where you have a week, you need to write this report on a company. I think that the assignment was study why Wegmans is a successful grocer. And you have to write
Wegmans. Okay.
It was cool. And I was like, fine. All right.
Yeah.
At the time, I'd never been to one. And, I had to write a 4,000 character essay turned in next week. And that's a lot for someone who didn't write that well yet. And so I was like working really hard on it. And the day before it was due, I remember asking a friend, hey, how's your project going? Do you feel kind of ready for the due date? Is making conversation with her. She says, I haven't started it yet. And I said, well, this is a long essay. Like, you haven't started it, and it's due tomorrow morning. And she said, oh yeah, I was going to go on Baidu later, and just kind of look at the company's history, what made it successful, and just turn it in. And I said, aren't you worried about plagiarism? It sounds like you're kind of plagiarizing. And she looked at me and said, well, no, people know why that company was successful. If I were to write it, I would get it wrong.
Interesting. So it was a whole different philosophy on it.
I think that a lot of Americans in this Western view of I think it is good to be original and to think deeply and differently. But at times it can over-rotate into inventing reasons that may or may not be true. And for her, it was so natural just to say, it's like, yeah, like we know the answer. And some people are like, why are Chinese companies build something really fast that looks like this and goes? And it's just, there is this belief.
They just copy and
there's a right and wrong answer. But I think that the thing that I try to pick up is you actually can be it is good to be a student of other companies, and you can understand what made them work really well and what didn't. And I find with a lot of other entrepreneurs, and startup people, they kind of just diss their competitors and aren't that interested in learning of what actually really worked. And they assume they're not smart. They assume their original thinking is going to be better. And I think that there's something about the Chinese startup way of viewing the world, of assume your competitors are actually really smart and they have a strong default answer. And you need to, I think sometimes those companies miss it. But I think the perfect marriage is assume they're great, take the good part, and then figure out what truly can be different and better. And so those were probably two things.
That's really interesting. Two more questions we ask all of our guests. What's a conspiracy theory you believe?
Oh my God. This is a good question. What is a conspiracy theory I believe? I haven't thought about this as much.
Anything in the banking world where, they're the big players are conspiring against the little guys, or
I do think in some sense, I actually think it was an accident that modern fintech was created. I kind of do so. Yes, I think classically, I think the big banks have conspired from a regulatory perspective with regulators who have very good intentions, often to not allow anyone who wasn't a bank to get into banking. And I think that
and they made it impossible to become a bank.
You can't buy a bank because you can't sell it. You cannot start a bank. It is even vague in how you can operate a bank. And for a country that values competition, I think that you had one of the most deeply uncompetitive sectors because of it. And I actually do think there is merit to that conspiracy. And I think in some sense, Dodd-Frank and then the Durbin Amendment had nothing to do and no intention for the corporate credit card ecosystem, but I actually think was the domino that indirectly kind of led to the creation of modern fintech. And so I think for people that have this view of there is a lot of regulatory capture in monopoly and financial services, I think that is true classically.
Our last question we ask all of our guests: what conventional wisdom or advice do you think is generally bad advice?
Oh yeah, hire the expert. Hire the VP of
Okay, yeah.
whatever. Like go. They've seen this show before. Some VC. So you closed around, find someone who knows what they're doing. And I just find that leads to like total like brains off, like lack of first principle thinking about like what is
Well,
the
how does that
situation.
jive with your China anecdote of like, okay, well, if this person's done it before, they can just copy the playbook here. Like, is in some ways you see those are almost diametrically opposed?
Not quite, but I think your response is fair. I think that the distinction is, and this is why I think a lot of there's a lot of Chinese companies that have been great second followers, but very few have like leapfrogged and become the total preeminent if they like have a copying culture. Which is that I think that hiring the VP of whatever from some other place can accelerate you maybe in the short run, but often if you are copying someone, you can copy the design, but you don't know why that car was built that way or why that tool was exactly built into it. And I think that if your way of solving problem is I'm going to go copy it, set it, and forget it, you may get many accelerations, but you can lose out the original first principles thinking of like, why was it this way? And so I actually believe you should hire consultants. You should ask for advice. You
Yeah.
should meet lots of people and aggressively like try to understand like what works. And so you should talk to every VP of whatever. But I think the decision of what you built, what you pursue, and who you promote has to come from like who's doing the work, why, and what first principles are originally in your business. But I actually think it's very popular bad advice because it sounds good.
Yeah.
And it allows people to skip over the harder lesson that I think people need.
What I found is interesting is that, like, let's say you're a company at 10 million in revenues and you want to grow to 100. They'll typically say, "Okay, great, hire the VP of sales who went from 10 to 100 in a similar company." And I think there's like two kind of issues with that. One is that often the playbook today to go from 10 to 100 is very different from the playbook that was maybe that person followed over the last 5 to 8 years. And so like that's just the wrong playbook just by default. And then the second thing is like they went from 10 to 100. They might not want to go back to 10. Like they probably forgot how much grunt work there is at 10. Like they might want to be much more strategic today and so they kind of already put in all the hard work. So it's not clear. They might think in their head they want to go back to 10, but they probably really don't want to go back to that grunt work.
Oh my God, it's totally. Now you're like giving me, you know, uh, weird chills just like thinking about it. It's totally right. Like most startups, the only strategy is just execution for a while. Eventually, maybe you earn the right to kind of sit back, but even then, it's people were going to lead from the front. And so, don't get me wrong. There's amazing, VPs or of people who've scaled. Businesses and know a lot of good things, but you're
What I
totally
found actually
right.
is you can rent those people. Like you can like if you want like you if you want to get like if you want someone who went from 10 to 100, you can rent them for a couple days a month, and they would be happy to impart all their wisdom and advice to you. And you could rent literally the very best person. You may only be hire like the number 100 person, but you could rent the very best person that's out there, and then you could have somebody with a little bit more energy, maybe not as much experience, who can then implement those things.
And by the way, I think this is exactly right and brilliant. And maybe to connect to two things. First, you can rent the person who then can go help the hero of their own journey. They're still on their hero's journey.
Yep.
They haven't done the run yet. And that's the amazing pair. Help them see around corner. This person is going to work 100 hours a week, wants to prove it, and is going to give it their all. And like that is such a good pair. And then last two, maybe come back to, maybe you're the Carlsons and you can hire whomever you want. Or maybe you're not.
Yeah.
But you know what? People would love to be an advisor, and they can help for a little bit. Maybe some of them later will fall in love and come, or maybe you can say, a lot of our best early hires were initially they were advisors and saw what was going on, and I asked them like, who's the best designer, or up and coming, and it turns out other designers go ask mentors, and they know who's great and who's looking,
Yeah.
and you don't. And occasionally they'll say, you know what, I'm the right one to come. And so
Totally.
rent, like approaching it in that way, I actually think is like was very important for us early on. And we don't talk about that as much, but I think it's true for people building. I think it's still true.
Oh, this has been awesome. Thank you, Eric Glyman, for joining us at World of DaaS. By the way, I follow you at eGlyman on X. I definitely encourage our listeners to engage with you there. This has been a ton of fun.
Auren, thanks a lot. I really enjoyed this.
And if you're a super data nerd, go to worldofdaas.com. That's DAAS, worldofdaas.com, and sign up for our weekly Data as a Service news roundup newsletter.
Thanks for listening. If you enjoyed the show, consider rating this podcast and leaving a review. For more World of DaaS, and DaaS is DAAS, you can subscribe on Spotify or Apple Podcasts or anywhere you get your podcasts. And also check out YouTube for videos. You can find me at Twitter at Auren, that's AUREN, Auren, and we'd love to hear from you.